Hi, Anne-Marie. Fine, just give it a minute or so and we get started.
Excellent. Roger, what is this interest rate projection, third quarter and so forth? Second year, quarter four, first year, quarter four. Does it mean it's forecasted for the next couple of years forward? That's
projections. No, the interest rate decision will be made, and then the GDP is coming. That's New Zealand. Sorry, the wrong one there. FMC is the Federal Market Committee meeting press conference. Economic projections will be his view what the economy looks like at the moment. Clearly, what the likely is going forward. In other words, we say we've got the inflation under control. Still a bit of time left. But at least it's coming down. We might see a little tapering off of interest going into 2023, that sort of thing.
okay.
That sort of makes sense. Just to basically, he'll give us the view of the economy going forward, basically. And that's why I'm every word he says. He might take that as a positive. I've got the NASDAQ, okay? You might have a little jump, and then he might say something that might market not like it comes down. So you often get some seesawing. That's why I'm just a bit nervous at the moment. That's the problem. It's not the interest rate. I'll be very surprised if it's anything other than 0.5%. Very surprised. I can't guarantee it clearly. Be very surprised. That's not the. It's the issue. It's how the market reacts and how the market reacts in the Q&A afterwards, and what his forecast is on the economy. He might say we're not out of the woods yet. Interest rates might have to go a little bit longer or whatever, and the market will react to that. Okay, simple as that.
Okay.
So yeah, I I'm very nervous. I mean, we got it's $0.30 now. Yeah, we got a dollar yen out, for instance. And looking back, I wonder if that was actually quite wise, because technically, I like the trade. I still like it. Well, it pokes its head below. I still like it, but I'm just wondering, being in a dollar event just before, being a dollar currency, sorry, just before a major event coming up at 9, I'm wondering if that was a bit imprudent, shall we say? But anyway, we're in it now, so there it is. Yeah, it's down at the moment, but to be honest, anything can happen. But we're in it and just hope to keep the fingers crossed. But it might get a bit of seesawing. So if you see me this afternoon, being at someone on the wary cluck, as we call it in the trading room, chicken side, please bear with me. And there's a good reason for that. Okay. Yeah, I just got a new lady on board. She hadn't traded for a while, coming back on to doing it. And she said, have you got any aggressive trades? I said, speaking at 9 tonight. Not really, no. That's why I haven't posted on the WhatsApp, as you can see. Yeah, because we've got a couple out. I can't see exactly flying that much. Hey, cool about that. Brent's doing okay. Mr. Luke, were you the one in Brent? 83 is your target. You're right on course there. $82 for that. Brilliant, eh? Again, people ask, should I go 80? And I was too nervous to go 80, to be honest. I was a bit too cautious for that. I think the upside with a $4 stock really demanded that. So I thought, I'll sit on the sidelines. But it's only gone up $2, but I still think it's probably correct. I don't know. But anyway, those are in and held on, and in your case, moved the TP. That was, I have to say, a brilliant move. I made a mistake as well. Often think of the stop loss, forget the TP getting modified as well. Done a couple of times, but often forget. And that was a good reminder for us all. You know, why not modify and hold on? You know, hold on to the blue, not instead of holding on to the red, as I say. So well bloody done. Someone's got the nerve and it's paying off. Well bloody done. Quite impressed with that, should honestly probably gather. Good man. Okay, yeah. So that's itself the good news. I'll start going downhill, I think. CHF JPY. Well, it's not a lot off, but it's still a little bit below. We got 78 I got down here in the trading room as an entry. It's a couple of pips below that. It's not bad, but it's not great. And then I think starts going downhill a bit after this. Euro NZD, we went for another one for a short. It seems to be, it popped up. We're still in. Seems to be holding. It's got to break back down again. So we're about 20 pips down on that, but hopefully it'll come right. Let's see. GBP JPY started off very well, and then it took a bit of a slide. Okay, but it might come back. It's back at 67. We got it at 35, so it's down short, but this 50-day moving average is holding, so that might come right. Next is coming in, so that might come right. Well, you must ask, not may you ask, you must ask. It's very important. This one is a 10-day, all simple, by the way. This is a 50-day. Well, actually, 50 on a day. It's a 50-week on a week, remember? So it's a 50 simple moving average, and that's a 200 simple moving average. If you haven't got them, strongly suggest you put them on the chart and then right-click, go to templates, and save the template. Okay, click on template, write your name in, whatever you want to write in there, and then save it. Okay, so if you lose the charts, just right-click and go to templates, and any of the same charts like I've got, they're all there. Okay, but that's important. These two I very, very strongly suggest you have because they're used worldwide. This one is my choice, but I think it's quite good as well. And you can see here, I use it as support resistance and often gives me an indicator of the stronger currency. It's neutral, even Stevens, if you like. And here it's slightly negative against the other currency. So the pound was down here, the yen, means the pound is the weaker one. Here it's neutral, and here the pound is the stronger one. It's come back and testing it, and you can see we're getting a little bit of a bounce there. As you can see, it's not exactly shooting the lights out, at least it's getting a bit of bounce. It seems to be holding. So you might come right on that one. Okay, if you're in it. And the dollar yen, as I've just mentioned just now, I'm a bit worried about it because nothing to do with the technicals. I still like the trade, but I'm just a little bit worried about what any effect Powell might have. Okay. And it's virtually impossible to predict because people just seem to react sometimes to information, not only surprisingly, but sometimes over the top. or perform it. Not very good English there, but you expect a bigger movement and not much happened on that. And sometimes not much happened on the fundamental, but had a big movement. Depends on the skittishness of the big boys out there. Okay, hope that's clear. And if you do understand that, and you do place it on that show, strongly suggest everybody has, and then save it. And that's exactly what I want you to do, guys. If you're not sure of something, is interact so I can help. I don't know, to be honest. I don't know. All I do know is the amount of people using the simple makes it self-fulfilling. Simple as that. I always use the film as an example. You might think it's a rubbish film, but if everyone's going to see it, you might as well invest in it. You know what I'm saying? You might be a real gourmet and you love it there to do a French bistro across the road because no one's going there and everyone's going to the bloody KFC or McDonald's junk food joints. You invest in that. It's just self-fulfilling. Can't think more intelligently brilliant than that, I'm afraid. No, it's just a simple moving average. Just all it is, the average movement of the price action. See this up and down noise? So like I say, like a serrated edge knife, which just smooths out that noise. And you can see over 50 days, the average price has been moving up. It's come off a bit, as we know the yen has lately, the dollar yen has lately. And the 200 slightly longer term, as you can see, is a fairly drift up kind of trend line. Okay. Too many indicators clutter the charts, to be my belief. Whether I'm right or wrong, I don't know. It's my opinion. So I'm sure some guys out there have cluttered charts and think it's the greatest thing since sliced bread. I personally think an uncluttered chart full of lagging indicators, I've just found through experience and trial error, don't help my cause. In fact, they clutter my cause up. They clutter the mind up. I'd rather keep it simple, straight. As I've often said on the dollar, let's go to find something. We'll go to the dollar switch strength. I want to switch on there and I want to tell me immediately what's going on. Clear it's the sell zone. Clearly, you should be looking at the sell. Yeah, and then take it from there. You know what I mean? You want to be able to look at it, get in, not have to spend half an hour unraveling it and find there's nothing there, and you missed out a trade that could be in another instrument, basically. So that's my particular thinking. But if you guys have your MACDs, Bollinger Bands, stochastics, Williamson percentage, whatever you like to call it, all their momentum indicators, I don't know. Feel free, it's up to you. It's just me. No, I didn't say anything about that. So we'll go back to the dollar yen. I personally, they call that either a devil's cross or a golden cross going up. I don't really subscribe to that. I've back tested short-term moving averages, and I found it hasn't in the past. It hasn't made much difference. Tried it short-term with exponential was simple, and tried the different numbers like a 7 and a 21 or a 15 and a 90, you name it. And looking back, when they cross and uncross, they're lacking too much to really even make any good. On a longer term, like the 15-200, by the time they're crossing, I mean, the ship sailed. You're either on board or you missed it. So rather keep it simple. Support, resistance. You're in a room right now. Look at the ceiling. That's your resistance. You're going long. The floor is your support if you're going long. If you're going short, the ceiling, therefore, is your support, and the floor is your resistance. Simple as that. And I base nearly all of it around those highs and lows. I've used this as a support resistance, this one, and sometimes you might get something like this. You can use the spike if you like, but I just use often the body, depending on the situation. But let's say you had a few, let's say, just pretend across there had highs there, there's several of them coming across here. That's a very strong resistance. 1, 2 is not that much. It's a little bit. Don't ignore it. We've had 4 or 5 of them. The more, the stronger, more the concrete ceiling, if you like. One's probably a glass ceiling. You know what I'm saying? If you've got quite a few up there and it comes off, it's likely because it just can't break that resistance. So I would not be buying it here. I would maybe, if I want to buy it, I'd put a buy stop above here, or I'd wait for it to break, confirm the break and buy it there. Or if I'm nervous about selling it, because it's quite a strong upward trend, I might wait for a pullback, like here, for instance, and buy it to back up again. If I did that in this case, shows I'm not cheating, because in this case, I haven't done me any favors. But that would be a fundamental. When you see moves like that, that's not a trading day, it's a trending day. Trending day is to get fundamentals, trading. That was yesterday. Oh, no, it's a day chart. That's right. He was yesterday. Good example. CPI came out. This is a trading day. Sorry, a trending day. When it's like this, is a trading day. Now, it might be quite a trading day, but you can work more on your technicals. The trending I don't like because anything can bloody happen. I saw a quick thing on that and moved on. Didn't go into details, but he got attacked by a lot of the ministers and didn't get any support from Cyril. I'm taking all this, and I came in later on with a hell of a mess, which I can't clear up because I don't have the dictatorial powers to do it. I bet if you really want to clear it, I'd be far half the people there, especially some of the pen pushers overpaid salaries, which are not really necessary to the generation of the product. But maybe I should be saying that. But yeah, it doesn't matter who you judge, unless they change the whole culture of it and get that whole thing sorted out and get the skills back on board and etc. etc. Not much you can do. It's almost like a minister without portfolio. You've got to take draconian steps. Not allowed to do it. We'll all go on strike. What can you do? Not to blame Eskom. We seem to be a symptom all over. Seem to be all over the place, worldwide, really. Anyway, okay, so yes, it's one of those things. What can I say? I don't know what your view on it, but who's going to replace that? I say it doesn't replace it unless they can do something. Give him carte blanche to do what he likes. That threatens strikes on in Transnet and one of the other ones. Then I'm not sure what he can basically do. But maybe I'm wrong. Hopefully. Yeah, the only thing I totally agree. I think that's probably why it jumped a little bit. Came off at 17.10, and anyway, went for it again around about this level here. But I thought, no, I'm a bit worried about the dollar. And then because he resigned, it had a bit of an effect, had a bit of a jump. But I think the overall picture is more fear of the dollar at the moment than the rand. There's a very good reason for that. The dollar's got bigger fears and bigger debt than South Africa. That's a bigger detonation than South Africa. But we don't count, they do. It's crazy, hey? But yeah, normally I'd say absolutely take it along. The thing is hovering around there is people are worried about later on this evening. Just be careful of that dollar, whatever you think. But yeah, okay. But otherwise, and if that, but there was about it wasn't about 9 o'clock show. This is a buy. Okay. See, the thing like I mentioned before, that people like to make economics even pretty boring, as opposed to most anyway. They're trying to make it even more boring, so people don't take an interest in it, so they can do what they better well like, and nobody really knows or cares because it affects them, but they don't know enough about it to make any comment. That's why people like the country, not just this, America everywhere, borrows money. It doesn't tax because you lose votes on taxing, so you go and borrow money. Under the radar, you got to pay it back. And then inflation kicks in, you know, it's major in the States. Well, I've put that through the God's view, but in my opinion, it's getting towards the end of a cliff, that economy. We should probably take everyone down with it. It's just going to be fun times ahead of that, I tell you. But yeah, the borrowing rate is just completely unsustainable.
But
yep. Go on.
Sorry, if the interest rate increased by 0.5%, I think the market's already done it, and the dollar should be more stable.
Yeah. Well, what will happen? Almost certain that's going to happen. That's been priced in. I agree with you. What the thing I'm worried about, and everybody else is a bit worried about, is what his view is going forward. Remember economic projections you made up about 15 minutes ago. You asked about his economic projections, his statement, his question, his press conference, his Q&A. What is his take? He might say it's 0.5% for now, but we still haven't got inflation under control like we want. We're getting the borrowing still getting out of control. So we're not going to be halting it anytime soon. You know what I mean? That'll have an effect. Or we're only doing 0.5% this time. It look like in the new year we might do one more, but if it stays on course, that will be it. That will have another effect. You get the idea. So it's the Q&A. But the 0.5%, you're quite right, it's been virtually discounted in the market. So I think everyone's worried about that. That's it. If it's not that, then you'll see some fire and brimstone. Trust me. But if it's 0.5%, that's discounted. It's the chit chat afterwards, in a nutshell. What is take on it?
Okay, I understand, because this morning I was looking at that squat box, and they had an interview with one of the, I tried to recall the guy's name, one of the big investing houses in America, and that guy reckoned they plan all their trades around, or all their investments, that the inflation CPI will only start be more realistic down to 4% and towards the aim in the first quarter of 2024. So they're already looking at that.
Yeah, no, that part I hear and agree on, because it takes a bit of time to flush in. It's not like a tap, you switch it on, or a switch on and switch off job. These effects take its time to filter through. So he's right. I think you might be talking about Jamie Dimon of JP Morgan. Does that ring a bell?
Maybe JP Dimon, definitely not Morgan.
JP Morgan is the company. Jamie Dimon's the CEO.
Okay.
JP Morgan's dead. You know, he's going back 100 years ago. He's one of the guys with Rockefeller and Andrew Carnegie, the steel magnate, that influenced the government. They chose who the president was going to be. Those guys were so powerful. Those three together were basically known as the unacceptable face of capitalism. Their power in those days was so intense. Okay, anyway, so yeah, that's why I'm a little bit nervous what he comes out with. And it could whipsaw anything could happen. So I think it's play cool for the moment. Okay, yeah, don't worry about the crossing uncrossing. Just use it to support resistance. Okay, going back to that. So you get that. That's fine. Well, Eskom. What can I say? We all live under it. We all put our opinions, whether it does any good or not. A lot of people's opinion about Zuma just make much difference. So tragedy all this, it hurts the people that should, or at least the more defenseless of the people. That's what hurts. And guys have got money, guys have got passports, can take a gap. These guys can't, Anyway, yeah, dollars are, normally, yes, leave alone for the moment. We mentioned that. Regards to the major open trades at the moment, a bit iffy, but anyway, we'll see how they work out. I haven't given up on them. I'm a little bit nervous the dollar, you have to be honest. Just keep your fingers crossed on that. The others I still believe in, so we'll see if they can come right. Okay, we have the opening up as 4, just remember. Just want to mention again, I'm sorry guys, I'm so glad you joined me. I'm glad you have, but some new guys, I just want to mention 9 o'clock, Jerome Powell, the chairman of the Fed, is coming out with interest rate decision and his economic projections on the United States going forward, which is going to affect the world. So steer clear of the dollar for the moment, steer clear of gold, and even really on the markets themselves. As I say, the stock market shares I'm talking about here, and the indices. But as we've seen with the CPI in the past, even the non-dollar related currencies have been affected. Canada, for some reason, seems to go in the same direction. It's a separate economy, etc. So even if, I don't know, Japanese yen and the dollar and the Canadian, look what happened to CAD JPY. It was doing well and suddenly flew out. So it's difficult to say. Remember, I think it's tomorrow. We've got the euro interest rate decision. We've got the pound interest rate decision. We've got the Swiss franc interest rate decision. So it is hectic. It is hectic. That's why these sort of weeks, cram it all in. I don't enjoy it much, but rather have it like a downpour of rain than drizzle for 6 weeks. Downpour over the 3 days, mixing metaphors here a bit, and then get out of the way. But trading in these sort of conditions is more of a flip of the coin rather than technical excellence, to be honest. So be very careful. Remember, I keep saying about that Clint Eastwood Dirty Harry film. Do you feel lucky, Bunk, or do you? Remember, if anyone saw that film? So if you feel lucky, Bunk, go for it. If you don't feel lucky, you'd rather leave it. Yeah, this is it. No, this is fine. This is what this group chat is. You can unmute as well, Eugene. If you want to go into more verbal detail, like Farney just did, you can do that, or you can write on the group. Yeah, sorry, you put on direct. No, rather put on the group. I'll put it back to the group.
Hi.
I'll tell you why. Hi, Eugene, because unless it's totally personal, it's a different story. Otherwise, other people could benefit as well. They might want to hear it, and you know what I'm saying.
Yeah.
Scared to ask. Anyway, go for
it. Sure. It's just possibly a silly question. Do you do trend lines through the body of the candle or through the wick, or across the wick?
No, actually, far from you silly. That's a very, very important question. I've mentioned this before in the training room, and those who missed it, I'm going to mention it again. Without doubt, by far and away, number one is support resistance, and these two guys as a filter. Far and away. Next, I go for the fin. And then on a separate area, I like the candle because it tells me what the buyers and sellers are doing. If I put a lagging indicator, it says it's the lagging indicator will tell me, let's say it's going weak. Well, I can tell the currency is going weak because I can look at the candle, gives that information immediately. And I can look at the wicks to what buyers and sellers are doing. That account, plus of course economic fundamentals, which just remind me of the copy and post. Right, coming back to your question. The major worry I do have about trend lines is just what you said there. Exactly that. A large amount of people use the actual, what you call the edge of the wick, and another large amount of people use the body. So that means you're getting information that is not reliable, because you let's say let's put a trend line in here for argument's sake. Just put one in. It's not correct. It doesn't really matter. Okay. You now are fixated to wait for the bounce off that, but a whole load of other guys will have this sort of scenario. You get it? So they will say, no, this is a trend. I'm going to bounce. I'll buy there. And let's say there's more people with that than that, for argument's sake. Then you're going to miss the trade. Or more people are doing this one, you're on board, and it's come off. How much it's come off? There you are, 135 pips moved down. You get it? So you'd have been stopped out, expecting a bounce off the trend line, if people weren't reacting to that one, they were reacting to this one, depending on the mood of the market out there. And some people put in the wrong place, like I've done. It's supposed to be the nearest two highs. So this, I would say, let's have a look. It's not very clear. I'm going to take this out of the way. The correct place is not to drag it across there. The actual correct place, the trend line, funny enough, is up like that, because it joins the two lows. If you do this and drag it across there, that low hasn't taken out that low. A lot of people don't see that, so put the line in like I've just put in myself. So you got all these guys putting in different thoughts where the trend line should go. So it's like a small pothole. Some guys might see it, some might miss it. But now let's look at the high here. I'm going to say something, Eugene. If you cannot see that, or your 10-year-old can't see that, or your wife can't see that, my strong advice would be to go to VisionWorks and renew your spectacles, because it is utterly sodding obviously in your face. I'm laying on a bit sick. I'm glad you're laughing, because I'm trying to make a fun out of it, and it sort of sticks better. Comedy is often the best way of actually teaching, I find. And it's so utterly obvious, like a blood. You can't miss it. If you're still driving and you got your 10-year-old sitting next to you, hey, stop that car, because it's in your face. But they might miss the trend line. That's why I very rarely use them for that reason. Because I might even have it in the right place, but it might not have it in a different place to react to. So it's giving me questionable information. So it's a very important question. I hope it answers it for not just you, for everybody else.
Yeah, perfect. Thanks.
Yeah.
Roger.
Sorry.
Roger.
Yeah.
This is Anne-Marie. Can I speak to you?
Please, of course, yeah, absolutely.
So just to cover what Eugene's asked, what is it? The wick that touches the stop loss or the take profit, or the body?
Okay, you're talking about stop loss or trend line now?
Trend line.
Oh, trend line, yeah. That's the whole point I was saying. Some guys use the wick, some guys use the body. Some guys join it in different areas. So I've seen knowledgeable people swear by the wick. I've seen knowledgeable people swear by the body. So is it, would you like, is it a Merc or a BMW? BMW says the Mercs are better than a Merc, and the Merc says the other way around. So it's half a dozen, 1/6 of the other, if you see what I'm saying. So that's the problem I have with trend lines on the candles. But who's it now came up with some here? Fuyukazi came up, but why not use the line chart? That is often not a bad idea because it's a lot easier to put the trend line in. So the correct trend line here is not going to tell you much because on here, you can't join that. It's got to be joined that like that. Okay, that might be a good idea. And a lot of people do that as well. I'm glad you brought that up. Now let's go back to this. And again, here it's done the body area, but other guys might not use that. They might be using this instead. Let's do another trend line. And I'm going to put the trend line connecting these two lows like that. And they might do that instead. Again, you've got different information coming through. I don't say I don't use them. I am saying I very rarely use them for that reason. Because psychologically now, you're working on that information, you're waiting for a bounce off that, but you might find it goes through it because more people, which you don't know about, are using a trend line, using a wick instead of a body or vice versa, or put it in the wrong place. And it comes a bit of a remorse from that point of view. Does that make sense?
It makes sense. It's just, you know, you're not always on the spot to see what happens when you reach stop loss or take profit. You can't really know if you're not in front of the computer which is which happens, which does touch first. I was just wondering, you know, if there's rule of thumb. So thank you.
No.
I understand. It's either this or that.
It's either this or that, yeah. Personal preference. I'll give an example. I'll use you as an example, Anne-Marie. Anne-Marie's been trading for 5 years, and she swears by the 15-day and the 30-day moving average. And she's happy with that. Who am I to tell her she's wrong? When you come across me, as in Roger, I swear by the 10 to 20. I've been using it. I'm so inured of using it. Who's to tell me I'm wrong? It's a bit like Americans saying you're driving the wrong side of the road. Whereas that's going to Americans say you're driving the wrong side of the road. It's opinions, you know what I'm saying? But why I advocate these two here, the blue and the brown line, is because overwhelming majority of traders, and that's the alarm for the opening, 4:30, the majority of traders use it. No more, nothing more than that. If the majority of traders use the 75 and 150, I'll be using that. It's as simple as that.
Thanks,
Okay.
Roger.
Okay, hope that all makes sense. Because when you unravel it, take the mystique out and show how clever you are and all the rest of it, most of it is actually pretty straightforward of emotional trend following, if you like. I was saying in the market, the trend's your friend until it ends. Right, yeah, well, that's correct. So in other words, this is what's a 15-minute, just opening now. In that 15-minute, it went up to that high, that low, opened there, and it closed there. So, and the other way around on the red candle. Swing a bit wide, so you see the jump a bit. Just coming in now, so see what happens. Before we look at the shares, just to see how it settles in. I can't guarantee, but I don't think you're going to get a hell of a lot of movement. I mean, it'll always move a bit. This is guys getting in and getting out on opening on what we call the spot price as the market's open. But I think once it's settled down, it's going to be fairly quiet going forward. I'm not expecting fireworks through till 9 o'clock. And already we can see on opening, it's been a pretty tight, it's already moving, well, what's that, 20 pips, which is okay, but it's not astounding. So it'll probably pop up and down, and as the guys get in and out of positions on opening, and then it'll probably settle down a bit. It's like you yesterday and finally on the shares. You know what I mean? You want to say it might be bouncing up. I'll wait till a bit. That's sort of principle. Because we're using what we call the futures going around the clock. A lot of guys trade the spot, which only opens at the cash price, if you like, which only opens when the market's open in that specific country, in this case, America. As another thing with candlesticks, I know you're all taught in classes, the Marabuza, or how to pronounce it, the bear engulfing, bullish engulfing, what are the other one? Sort of one you think of it now. Dojis, hammers, morning, not sunset, morning star, evening star, all these. Learn if you like. if you want to pass the exam, yeah, the main thing is for the candle to see what the buyer and sellers are doing and to get a confirmation of entry. We want to buy it now. We might want to use let's say a green or a red candle if you're going short on an hourly or 15 or 30 minute or whatever, just to give you a confirmation of the breakup or through a particular line. Okay, on its own, I wouldn't go for it. If you had a bullish or bearish engulfing candle right now on any instrument, that alone is nowhere near enough to make a decision. That all it is a confirmation. That's all I want it for. Let's say it's a daily chart and it's here now and the price is here and it's looking like it's going to break through. I might wait for candle breakthrough to confirm to come back in a candle breakthrough to give them a confirmation then to go down. Or I might get aggressive, solid. I feel it's going to happen anyway. I'll go for it anyway because I'm being aggressive. I'm strongly trying to push here that anybody who takes a bit of an interest, doesn't have to be a genius, within a week or two, certainly within a month, has got a general idea how to look at the trade on a chart in a reasonably quick time. If you're spending months on it, it means you're overcomplicating it. And remember, whatever algorithms you got on history, with all moving averages and all these indicators, all history, won't cut it on what the price action do, which is governed by the buyers and sellers, which includes fear and greed, very much so. That's why I say demos are a waste of time. In fact, they're worse than a waste of time to trade on. They're just there to learn how to operate the machine, the platform, and of course you'll try a new strategy, I suppose. But to try and learn to trade on demos waste your time, because the biggest, toughest, you all know, you live traders, it's the fear and the greed aspect, those emotions. Take them out of it, and the majority of trading is missed. I mean, look, Anne-Marie, now looking back, you could have held on the NASDAQ and that brilliant first time buy, stop, sell, stop strategy on the CPI. If it'd been a demo, you probably would have held on longer because you wouldn't have gone through those nerves. You've got to have those nerves to learn how to trade. Take them out, you're wasting your time. Because once you leave the demo and you go live, it's a completely different ballgame. You know what I mean? What this trade in, don't trade this, no, leave it alone. I'm just trying to explain stuff. Let it go in now. No, please don't do that. You go to Lou and come back. It could be right down here somewhere. Just leave that alone for the moment. Okay. And as I mentioned before, don't even think it touched the NASDAQ unless you've got about 4 or 5 grand upwards on 1 micro. I don't want occasions like I had a guy yesterday and he's completely upset because he put 100 pips stop of the NAS and then that's far too tight. And it moved 50 pips against him and it was closed for him. How can we go and do that? Well, he's 500 rand, guys, and because he had a 501 over leverage position, he put in 5 micros. That's the sort of thing you should be doing when you're about 20 grand in your account. You know what I mean? And he had 500, and he had 5 micros. Because it's so highly leveraged, you could do that. And of course, it came back in margin call. He was very upset about it because he didn't understand. It doesn't, unfortunately, the hard way. So, yeah, I personally have been advocating maybe, the world's going this direction where we start reducing leverages because there's too many retail traders not knowing the cons of high leverage. They might know the pros, but not the cons. Okay. And a highly leveraged instrument, you've got to remember the exposure, not what's going out of your account, the exposure. Agree, Leotili, but I'm sorry to be negative here. You'll never really master. You'll get better at it, you'll get more disciplined, but it's in our genome, emotions, not to get rid of it. If I suddenly come at you with a knife, you're going to have fear, unless you're some sort of tier 1 operative. You take it off in seconds. But joking apart, somebody comes and points a gun at you, fear's going to come in. It's a natural reaction. It's always going to be there. Just the control and discipline of it gets better. That's why I say sometimes better not to stare at it all day. Go and do other stuff, look at other trades, look at other possibilities. Keep staring at it, start playing havoc with the old psyche, and then you don't do silly things. Yeah. And naturally, when you start, of course, there's emotions flying. It always will be there, but it's like driving a car for the first time. It's very difficult. You get in the car after about 10 years, you know, driving. People say you shouldn't. Anyone say in theory. That's why I like the practicality of the trading room. We all feel the same thing together, so you got more empathy with your fellow traders. Standing in front of a theory situation, well, easy. Okay, right, let's look shares. Okay. I think most guys are out of BA, so I'll leave that. Baba has come off a little bit. Good, leave it alone. Don't get tattooed with it. We're in it. I think it's about 92, something like that we got in. So it's a little bit in profit, but leave it. Brent, we're out of it. Don't want to chase it now unless you're very clever. You modify your TP like Mr. Luke. Don't know what else. Oxy. Let's go down to Oxy. Yeah. Oxy is doing okay. We're in a slight profit on Oxy, mainly because the Brent's gone up a bit. Oil's gone up a bit. So Oxy is not flying. I'll give you due, but at least it's in profits. So we can say that. Microsoft, some guys went back into it, which I suggested to trade. Don't think many guys went for it, but I know a couple because I've got it written down. So 261.50 at the moment, with $2 in profit. Just hope Mr. Powell doesn't screw it up for us later on this evening. Okay, I'm not sure if anything else. S&P we left. I think we stopped out in the profit. Did we get in? Yes, we did. We got in again at 450, 40.50, I should say. Slightly in profit, but anything can happen there. A little bit nervous of it, to be honest, even though in a profit, because anything can happen again later on this evening. Okay, so we shall see, or we shall see. But don't forget, the euro is an enormous economic zone. Interest rates, Swiss franc, we all know about that interest rate, and the pound, we all know pound interest rate tomorrow. So there's three big economies have interest rate coming in tomorrow, and the biggest, of course, the euro included. So it is a bit of a minefield at the moment from a trading perspective. Okay, and you can sort of look at, you know, flags and breakthroughs as much as you like on the chart, but a fundamental trend situation could make it go through that thing like a knife and butter. And sometimes and often, unfortunately, not the way you want it to. But I'm glad you had some success with that trade, Anna Marie and company. So I know Mark did it. So maybe at the next non-farms or the next thing that comes out in this fashion on the US, maybe if it's that important, we can analyze it and maybe look for just that buy stop, sell stop kind of trade. As long as before you go in, you know exactly what it's about that we're doing. Not thinking, oh, well, I was told to do it, so I'll have a bash. No, you got to know what you're doing. Okay. And I think it worked out quite well for you, Anna Marie.
No, Roger, I made only a small profit. My husband obviously did not enter because of we decided I will go for the down or the up, and he will go for the other one.
Oh, I see. Okay.
Yeah, unfortunately, I just took profit a second before it shot up high. I would have had a much bigger profit. Learned a very expensive lesson. But yeah, unfortunately, my husband got a bit of a loss with the other trades that he was in since the morning. So we are a bit, what can I say? Not scared, but we are looking. We're looking at what's happening. It's our first. It's our first December for trading, and I realize that. What I hear from you, that it's not usually this way.
Nothing like this. This is as bad as it gets.
Yeah, so it's not a very good time to learn how to trade or to be very self-confident to trade. Yeah, but
I hear you, but that's what you're saying. But at the same time, whether you're confident or not, when you get these market gyrations through the fundamentals, it's really taking luck in and skill out, if you like. So that is the problem I have against it. If you're trading by luck, Why do this? Want to go to the Monte Casino or Caesar's
That's
Palace,
true.
the Emperor's, and get
Yeah.
a nice drink and sit at the roulette table. This is supposed to be a skill where you can get ahead of the game. But when you take the
Yes.
skill out of it and just flicking the coin, rather stand aside.
That's
Yeah.
that's true.
Yeah.
That's true.
Yeah.
That's why I haven't tried it at all today, and I'm not sorry about that. I'm looking, I'm learning, I'm listening, and
yeah.
but I'm
Well,
just waiting.
Yeah, you're asking questions, making statements for a person who just started. They're quite informed, so obviously putting the effort in, it's fallen into place. And I want to say something. It's a very expensive lesson. Actually, it wasn't a bad lesson because you actually made a bit of profit. You didn't lose. So you lost very expensive. So what you mean is very expensive because you didn't buy the lottery ticket and the number came up. You didn't lose. You didn't win, if you like.
That's
But
it,
at the same
yes.
time, so you learned a valuable lesson. We actually made a couple of bucks profit. That is an ideal.
Yes. Yes, yes, but you feel like kicking yourself a second later when you see, wow, there it goes up.
Yeah,
But
yeah.
I'm
Yeah.
still a bit. I'm sometimes I'm still a bit nervous. I'm a young trader. I'm not young, but I'm a young trader. Maybe because I'm older, I'm more careful.
Yeah. I'm the other way around. I'm an old trader, but in years I'm very young. I'm just kidding. Just kidding.
No, we're hanging in there. Thank you, Roger. I'm learning from you. I'm learning from the others, Fani and Michael, and even Jethro.
Yeah.
It's nice.
Jethro
It's a nice forum to be in and to listen and to hear. Thank you.
Yeah, absolutely. Thank you very much, Emily. That's what I'm trying to aim at. Where it is a forum where we learn from each other. I mean, Caradon's on the moment came up with, by the way, I know it's only 2-star, but the CPI's come out on the RAN. Well, 2-star in the international way, but for South African perspective, it's a 3-star. So I had already filled that out. So it's a very good point. So we learn from all of us, or everyone. Now, I want to go back to what Mr. Luke said there. But then what if it triggered the buy and came down for me? So it's a very dangerous way of trading. Absolutely. That's why I say you've got to be aware of the ups and downs, the risks involved before you do the buy stop, sell stop route. And you got to know the difference. You wouldn't put a 20 pip above, 20 pip below, let's say on the NAS, because it's a different volatile instrument. And sometimes it works absolutely. Where it can is conflicting information suddenly comes out. Where, for instance, you put in your buy, let's wait, we'll do it here as a market entry. You put your buy stop there, your sell stop there, shoots up, takes you in, and then everyone takes profit, shoots down, takes this guy in, and shoots back up again. Then you're not done yourself a favor. And be honest, the last few times that hasn't happened, but I've seen that whiplash on quite a few occasions. I have to be honest, one good thing, not recently so much. It might happen with Powell tonight, so don't even think of doing the buy stop, sell stop on that. I'm talking about purely when, let's say, at 3:30, that piece of information comes out at that moment, and then you can react to it accordingly. And the thing that I would do when you do it, that's what I do anyway, if it, let's say it goes long, it takes me long, I immediately go and delete that sell order, that pending sell order. You get the idea? So I got rid of it. Then what I've done on the NASDAQ, for instance, as it starts moving up, I want my stop loss up to entry to see, I might get stopped out with nothing, but if I can then ride it, and if it continues to ride up, I've covered my, excuse my language, my ass, and then I exit it or move the stop up so it starts coming off. Let's do the NASDAQ while we're on that subject, on the S&P here. Yeah, when was it? The daily, okay. That was yesterday. And then move that up and follow it. Now it'd be in front. And if the dogs need to take it for a walk, well, the wife's got to take it or the kid's got to take it. You know what I mean? I'm in front watching it. Don't disturb me. Hang on a minute, you know, the soapy's coming on. We'll go and switch it on. I'm interested. I'm watching this. I'm fixated and I'm moving it up until it eventually comes off. Let's go to an hourly chart, see what happens, move it up. I'd have been stopped out around, in fact, I was stopped out, it was just around about there, I can't remember anyway. But that's exactly how you work it there. Yeah, you don't want to be on board, this coming back off. You see what happened? So you'd have been stopped out about there. You'd be on it, you know what I mean? If you can't be on it, you've got other stuff to do, you're about to drive home, you're going to be kicked out the or whatever, don't do it. You've got to understand the pros and cons, like Mr. Luke said, take that in consideration, and you've got to be on it. And if you do all that, it can be very, very profitable. Very, very quickly. That's what I like. Yeah, well, Zeph, Mark all know a little bit. Anne-Marie knows a little bit. Mike, Farney, there's a few guys in there who've done a bit of trading before. All I do ask, don't start chopping and changing your swing, like, you know, on every bit of advice. Take it all into account and sort of tweak your specific strategy to make it better. Don't sort of just, well, Farney says that will do that, Anne-Marie says that will do that, Roger says that will do that. Then you'll be coming back and forth, back and forth. Just use anything you think relevant to tweak. And that's when the demo might come in. You might say, not a bad idea. I'm going to back test it first. If it works, then I'll go back on the live.
That is exactly what I'm doing. I need to thank each and everybody for all the inputs, because that's the only way currently I really enjoy it. My day is not fulfilled if I haven't learned anything at a trading session.
Yeah. Well, there you are then. And just so much, quite a bit. But you'll probably find most of the learning curve is usually understanding the emotions out there and keeping it simple, etc. And not trying to get too cute on the fundamental, those sort of things. But yeah, bits and pieces. Sometimes you forget to tell somebody because you know it and you didn't realize you know it. I remember once I tried to give a Zoom explanation about 3 years ago to somebody, and the poor person was bamboozled because you don't know how much you do know over a period of time until you explain to somebody who's completely new, and all you're doing is completely bamboozling the poor person. So rather come on a regular page and pick bits and pieces up, and if anything comes up you're not sure about, you know, jot it down and ask, like you've been doing now, like trend lines, things like that. A lot of people are scared; they haven't got the confidence to go on the chat line, never mind unmuting, and they think it might laugh at, it might be a silly question. And it turned out that what Eugene said, that's a silly question, far bloody from it. In fact, it's a very pertinent one. And that's why if someone asks a question, I often mention it out loud for the group, because some guys there are frightened to ask, but thinking exactly the same. I mean, remember I went through, was it the day before yesterday? Was it yesterday? I can't remember, about how you can partially close a trade. It's quite surprising how many people in the trading room have been trading, didn't know you could do that. So they got, let's say, 5 micros and they closed the lot. Didn't know you can close 1, 2, 3, 4. But now close the whole lot. And now they clearly do. Yes and no, Pete. Yes and no. If you asked me about 5 years ago, I used to leave the stop loss, and only when I got near a target, I might sort of maybe modify it because there's so much more on technicals. But now with the fundamental interference we're getting all the time, I personally get the stop loss in, and then when I'm in, let's say 30 or 40 pips, depending on the volatility, not the NAS, I'm talking currencies here, I move it up to entry, and then I'm chasing a bit, maybe keep it a few pips, maybe never close to 20, otherwise I might take it, get knocked out. Maybe 20 pips behind, depending on the volatility of the situation. A lot of times I've been stopped out in 10-unit profit, and I could have made 20, but more times than not, I'm bloody glad, because if I hadn't had a loss. Microsoft, a good example. We've stopped out in the profit. What was that? Euro NZD was another one. Went shooting back up again. You'd all back to square one. In fact, you've been slightly in a down at the moment. But because you modified, as a reminder, we modified again twice yesterday. Mine from 5 to 64 when it broke that. And most of the guys are knocked out and obeyed that, which did that in the trading room, would have been knocked out in a 90-pip profit. If they hadn't, of course, then they'd been down in a slight minus situation, which is not good. So, yeah. Yeah, and the temptation as well, because you don't want to take the loss, is you got your stop loss here, and they may say you got your stop loss here, but you don't want to take the loss, so you move it away, you move it away, you move it away. Now you're way overexposed. Now you've got 20, 25%, 30% of your entire balance in this one instrument, hoping it's going to come right. Well, turned out it sort of has, but still. If you stopped out there, you're still better off than where you are now, if you get my point. Just use that quick example. So the temptation, I've done it myself. I've got my hand, I've done it myself. move it away. You don't take the loss. It's bound to bounce. You've married the trade. You know what I mean? It has to. You're right. You've got to be right. You can't handle being wrong until it comes right. Unfortunately, you get into itself big problems. A good example I'll show you now is GBP CAD. That was a hectic one if you didn't have a stop. There we are. Let's go to daily, and we'll use on this one here. You know, you decide there's a good time to short it. Moving average. I think the Canadian's stronger than the pound. We discussed it a lot of time a month or so ago. So you had your stop loss here to short it. It went up, so you moved your stop. Moved up, moved to stop. Moved up to stop. Now your margin called. You get the idea. I don't know, Eugene, to be honest. You can play around with that yourself. I haven't really used a stochastic or Ian Maiden cave, but not even that very often. Stochastics not very often. Energy strength. Used to use in the past, but haven't for the last 2 or 3 years, to be honest. I've found I needed them, so I've got a bit out of that. You probably know more than me on the algorithm part. I know what the indicator is. Best thing is just to play around with a few, back test them. I've already done that if you want to know that, and I found yeah, you win on occasion, losing the other one, follow back tested. It's rather stick support resistance, keep an eye on those fundies and see where it's in the buy with meets sell zone. And I found personally, I've won more than I've lost, put it that way. So I'm sticking with that. And it's a hell of a lot quicker, easier, and simpler. But Eugene, I'm trying to embarrass you, but win up your bum, but you're obviously quite a clever guy. We've spoken before. So if you're a mathematics client, play around them on the demo, see if something fits. If it does, and you're getting far more winners using it than anything else, maybe you can share it with us. We'll give it all a go here. But don't look for the holy grail of the 95% wins. Bigger, cleverer people than you, with more expensive systems than you've tried that. You're always going to get that human emotion coming in where daft things happen. If you play blackjack, you always get someone who doubles up on 17 or asks for a card on 17. And which of course, you know, play blackjack, it's not a clever thing to do. Emotions, and that's where you can stuff up some of the system. If you've got collectively enough retail traders doing daft things, you can stuff the system up a bit. Yeah, now what Zeph's saying is this. You've got your position size calculator. You've worked out what your risk, so you've worked out your strategy. You're not going in because it seemed like a good idea. You're not gambling. So you say, right, I've looked at this. This is strong. There's no fundamental to stuff it up. I've got the confirmation. It's bounced off to 200. It's in the buy zone. And I'm going to put my stop out the way down here. I'm going to take that. And I find it's, let's say, 80 pips. Now I know 80 pips is about $8, which is about 130 Rand. I know I want to risk, let's say, 1,000 Rand. I divide 130 with 1,000. What that comes to is about 7, just under 7. I could go 7 or 8. I might round it down to 7, depending on how I feel. And then I put my 7, and I then cycle. I say, I have lost that trade. I've written it off in my head. So anything better than that is going to be a cherry on the top. So now it comes off. It's going on. You still got your stop 80 pips away. It comes down 50, 40, 20, 50, 60, 70. Oh, God, what's happening now? I don't suddenly get out of it or panic. I leave it, get stopped out. Well, that happened. That was my strategy. It flirts with it. It might not quite get there. It moves up. That's fine. Now it's going to profit. That's fantastic. The problem with that is now it's in profit. We're all guilty of it. We take it after it's moved 2 pips because we're so sick of being in the red. Then it goes up fine, and now you're not on board. So that's why I say we hold the reds and then we get out of the blues too quick, and the result of it backfires. So now if you come down to third of your stop, you're still in, you had your strategy, your mind's okay because you've written off that 1,000 Rand or 500 or 200 Rand, whatever risk you've taken. If it's too big and you can't write it off because it's too big, don't do that. Get it where you can comfortably afford to lose that money. That's what I say. It's all a word to say, comfortably afford to lose that money. If you comfortably afford to do it, not say I don't like to, nobody likes to, but you comfortably can afford it, then you go for it. And only when you get about 30, 40 pips, depending on the volatility, get your stop up to break even or maybe just above to cover costs. And then you find your attitudes change completely. You can relax more. And then when you start getting your stop up to maybe 30, 40, 50, 60, 70 pips in profit, and you're still in the trade, happy days. Takes a bit of discipline, but the emotions, especially you guys understand, I was you as well. They go into trade, expect to go immediately when their favor comes off a few pips. What do I do now? Shall I close it? Shall I sell it now? That's just panic trading, and that will always come back and bite. Emotions in your hurdle, Farney. Sorry, mate. Emotions is every single human being who's not brain dead on the planet's hurdle. Unfortunately, it's the way we are. Sorry about that, mate. You ain't unique there. Yeah, we did actually. Hope it's going right. We did actually, yeah. 67.35. Don't tell me it's not going right. Yeah, start to come right a little bit. But still, yeah, we did do it, yeah. We bought it yesterday. Maybe we should have known in and maybe should mention buy again today with a better price. It's bounced off here. Here's the trade, guys. What we did yesterday. It's in the buy zone. It came back and tapped it, and we had a few buyers coming in, which is a confirmation. We bought it, and the bloody thing came off. Okay, but it is holding and it's moving back, so we might come right on it. But yeah, we did do it. If you want to do it, you can. Anybody? I forgot about that. Sorry, Pierre, you're quite right. Anybody want to do this? We're already in, so clearly don't double up. But if anyone wants to do it, you can still do it. What's the stop we had at? 166.52. See what that is? 166. A bit of neuroscience coming here, right about that level. Somewhere around about there. So stop was somewhere around about there. And the TP we got at 168.80. We're up here somewhere. Yes, right. We got the stop up, sorry, the TP up about there. And yeah, if anyone not in it wants to do it, you can. Yeah, we all do that, Pete. Everybody does. The problem is, if you take a loss, you go in too small the next one. But the last one was history. This is new. The thing's freshly clean now. And you don't stick to your guns. I want to risk, let's say, 10 units, for argument's sake, because your nerves are losing last one, you're going 5. This one comes right. Or even worse, you made 20 on the last one. So I'm now feeling hell of a confident, and I go and overexpose the next one. This comes back and bites. You've got to be disciplined. If you're prepared to risk 500, risk that 500 on every trade. Okay, what your leverage is, what the instrument is, it's 500 Rand. If you're doing well, then you might increase it to 700 Rand risk, but stick with it. Not 650 here, 800, 900 there, 1,000 there. Look at a hell of a lot of accounts, and some that are about 2 grand down, another 200 down. Some got 0.02, some got 0.1, all over the bloody place. That's not the way to do it. You've got to be disciplined and boring, to be honest. Boringly disciplined. Waiting confirmation. Okay, that's fair enough. See it, Jeff. Well, I'll look for in a moment, but on the hour, you don't trade on the hour, just for confirmation. Some of the questions you're asking means you've done a bit of study, so that's good. You obviously know a little bit to ask those questions, which is good. So you're saying the pivot, in other words, it's holding still on the hour. Remember, these moving averages, guys, work for all of them. This is a 200-hour moving average, and see how it's effective. It's holding. It's holding. Okay. So I think that the idea of going up is fine. 4 hour, it's trying to break through. This is my only slight little negative. It's not clearly broken through 2 of them, but it's trying to put it that way. And this area here is holding. So I still quite like it. Anybody's not in it wants to go for it. The trade is there for you to take if you want. CHF-JPY, we're already in that one. My only worry with this one now, to be honest, is tomorrow Swiss is having an interest rate decision. So it's, I forget what they're thinking. There might be another 0.25%. We'll see. That could and might affect it. But having said that, we're about break even at the moment. We're at 78. It's now 73 on the sell. So there's a couple of pips below. So be it. But it's still looking okay. But with interest rate decision coming out on the Swiss franc tomorrow, might be an idea to stand aside. That's why I'm spending some time chatting about things here, which I need to do, because also if you don't ask questions, you've got no trade. I start twiddling my thumbs. What can I regale you with now? So this makes it enjoyable. We're going over stuff, not trading like in the classes, but going over stuff, tweaking, overcoming the mistakes that we can tweak. You know. But yeah, okay.
But Roger, that CHF JPY hit my stop loss. We took that, or I took that trade late last night, and my stop loss was different to the guys that entered this morning.
Oh, okay. I'm trying, I don't know what your stop loss was, but guys, try not get too tight a stop, because again, fear comes in. We're scared, so we put a tight stop, and often we get kicked out in a winning trade, and that really is seriously irritating. You know, so you wanted a reasonable stop. I'd rather have 300 Rand a micro with a wide stop in the correct place than have it, let's say, 50 Rand a micro, just give me the opportunity to go in bigger and with a stop that might be kicked out in the noise. My opinion, anyway. And sometimes it happens. It comes back and knocks you out. If you had 3-5 pips, not very often. I've had it 5 pips, a little wider, and still been in. I've actually in US dollar yen about 6 months ago, 5 months ago, whatever. 5 pips lower, that stop loss, and I'd have been in and end up in the profit, but so be it. But yeah.
No, that was exactly what happened with the CHH. I had visitors and I wasn't in front of the computer, and it actually, the week went just 3 pips below my stop loss.
Oh, yo. If it's 50 pips, you don't mind, but 3 pips, then you're really upset. Certainly I would be upset. Yeah, so rather make sure your stop is wide enough to account for the noise. You want to know if it goes down to your stop, the trade is wrong. It's one of those things, the trade is wrong, it's not going your way. Okay, and ZDCHF. We've been short on that thing since I think the Dead Sea first reported sick, as they say. At 81 we got in about I think it was in the last millennium, slight exaggeration, and it's now well, just under 20 pips in profit. It's just hovering around there. If you're in profit and you're fed up with it, take it. At least you're in profit because your swap fees are adding up. If you're not in it, I wouldn't be buying it. I think you think of maybe buying back up there again. How far is that? You see, it hasn't broken through the 200-day moving average. That's my concern. And the trade with 80 pip target, you need to have a fairly tight to make it. You know, you need to stop about 30, maybe 40, pushing 50, but say about 40 pip. I'm always nervous of 40 pip stop. To me, it's a bit tight. If you believe and think it's going to go higher up, so let's say, that's not going to work either. If you think it's going to go up to this area here, how far is that? Yeah, you could do it. If you're going to aim on the weekly, if you're using the weekly to aim with a 50-week moving average, you could look at it. But yeah, this is a week chart last week. This is a week, remember? And that moved 70 odd pips, which is not a heck of a lot in a week. Okay, so for that reason alone, I think it's not really worth it. Can the noise last for hours? Not what you mean. I mean the noise is the sort of the moving up and down. This is let's try something else. Yeah, I tell you what, this is the noise of the movement there. So you want to keep it out of the way of that noise. This noise is the up and down movements. When you say last for hours, I think what you mean there is can the indecision last for hours? Absolutely. I think it was mentioned this morning, the most indecision by somebody, and that is the most frustrating thing in trading. Yeah, you can sometimes you can like just carry on noise, nothing happening. It's it's not happening in any direction. It's not going up or down, just hovering around. That's just very frustrating. How long it lasts, God alone knows. I have no idea. It depends on what buyers and sellers are doing. But yeah, normally what was waiting for is some big institution to start moving the thing, buying it, move it, and then the other guys can chase it. We're basically as retailers trying to wait to see what the big boys are doing and follow on their coat strings. If they're not doing anything, what can we do? You know, because they move the market We do it now. The retail's big enough now to move it, but not still dominated by the institutional players. I met a guy once. He's an Indian guy who lived in London, an house in London, or a property in London and in New York. And he was saying he had $1 billion book. And make the guy admit it old before his age, because the stress of handling other people's money at that level is hectic. You know, they're going for one lots, you know what I mean? They go in serious positions, and it's very stressful for those guys. But he's paid well. Anyone who owns a property in London, believe me, he's got Tom. Very well paid. Hey, takes it out of you. Okay, do we want to look at a share today? If you can find, we'll look at it, but I'm sorry, this is going to be a bit of a boring session regards trading, I think. Is because, I say, because Powell's speaking later on, and it seems to affect so many others. And what's adding to the problem is the three big boys there having interest rate decisions tomorrow as well. So it's really cramped my style, to be honest. Thanks, Eugene. Thanks. It's normally a lot better. We get good trades out. We've had some buttes, but this is style cramping job at the moment. That's what I'm trying to spending on some chit chat where we can maybe learn stuff. Before you go, hang on. Before you go, do you have the economic calendar? Just going to post that quickly. Give me a second. If you've already got it, okay. Just wait for a moment. I'll post it. Those who don't have it, please have it. A copy, save it into your browser. I'm also going to put the dollar index, very, very important as well. Just give me a moment, we'll do this as well. So if you don't have these two, save it. And then when you trade, have it minimized. Don't have to have two screens, you've got one, that's fine. I have to have two. So I've got my charts on one screen and I've got this minimized the other. So I can flick to the currencies, I can flick to the yields, I can flick to the index, I can flick to the economics calendar or whatever. I've even got business day there of interest. And even got our website there. People ask what's happening on the website, I've got it there as well, just to remind and check.
And I've learned a very important lesson today.
Okay.
The fact that filter it to 2 stars, then at least we have a better idea of what's going on in South Africa as well.
Yeah, that's a good point. Hear that, guys? Eugene included. If you can't, I filtered it. But if you want to filter it again, it's quite easy. The top right corner is a filter there, and you can add stuff to it. Okay. I'm not sure why it's a 2-star for South Africa, unless they're thinking from the American point of view, because a CPI is going to be 3-star. Don't care if it's from Timbuktu. You know, it's important. It's telling you what's happened with inflation. So I'm surprised I had a 2-star. But that being as it is, they did. So as Fani said, filter it. Rather too much noise, and well, not really. You don't want too much noise, but rather, you know, keep a couple in that you like there. But don't have something like the Mexican peso, Indonesian ringgit, or whatever, or the Kuwaiti dinar. It's wasting your time. Okay, good enough. Okay, Jean, hope to see you again soon. Okay, right. So for buy, if that 200 was maybe 50 pips above, I'd go for it. So if you still want to do the buy, you have to make a target here. Okay, and then you get your risk reward. Make sense? Then you put your risk, maybe your risk down here. Yeah, that's too close. What is this distance anyway? 120, so we can go about 70 pips. Yeah, you could probably risk it on that basis. Maybe close to 80 pips. Stop loss. You should squeeze a risk reward in there if you want to do that. I would agree on doing that. It looks like it might have a bit of a bounce, even though it's in the sell zone. But either way, I'm a little bit nervous at the moment for the reason we get fundamental reasons, not trading reasons. Remember, it's a neutral zone the daily, so you can buy or sell it. But I don't disagree with you at all. I'm just a bit nervous how the Swiss franc will react tomorrow on interest rate decision. You know what I'm saying? And it's not a quick enough mover to guarantee you're going to be out on it. Okay, right. Just have a check to see if the dollar yen's anything happening there. What do we get in there? No, it's not. Ugh, not pretty. Maybe we should have done it in hindsight coming up. Anyway, we've done it. So be it. JPY is trying to come right, so that hopefully will come right. CHF JPY. It's in profit. Sorry, I had a silent moment. I looked there. The last couple of days haven't been too good to me, I'm afraid. So I had to step back and looked at rubbed my eyes a little bit. It's actually in profit. Bloody marvelous. No, it's not. It's the way to go yet. At least it's in profit. Euro NZD, is that coming off and to sell on that one? I think it was a sell. No, not doing you favors at the moment, is it? Hopefully it will come right now. Not much I can really add on that. Everything's going to be abeyance. Let's see, look at the NAS, see if it's doing bugger all, which I'm expecting. It's gone up a bit, eh? Interesting. Maybe it's preempting the interest rate decision of 0.5%. There's good news coming out, and the big boys are banking on that as a positive, and they're getting in now. Maybe that's what it is. Push it up. I don't know. But I thought it'd be a lot quieter and more sideways than that. I don't think it's going down now. Why is it going down? Doesn't make much sense to me if it's going down. No, don't know. Brady, I do not know. Look at WTI, because that's an American company. WTI is American oil. That's doing okay. It's doing okay. Why is Oxy coming off then? All right, the only thing I can think of on that is we go back to the noise again, buyers and sellers. You might have remember I talked about that guy, the $1 billion book? There might be a guy there, he's going to unload his position there, short or long or whatever he's, which way they're going. And he decided to go out or in on a big one. Maybe someone's gone short on it for some reason with a very big size. Somebody maybe exited there long by selling to exit to get out. That might be just a big buyers and sellers moving large positions. That's why it might be going slightly contradictory. But otherwise, other than that, I agree, it doesn't make a lot of sense. So probably big traders playing around. If that's the right word, playing. Sorry, I can't think of any more intelligent than that. Because remember, you know, Brady, let's say you bought, let's say, a couple of million or sold a couple of million shares of that or exit or whatever, it would move the market. That's one thing I do like about the euro dollar. You know, you'd have to basically be a government to move that. It's so big, widely traded. And as I say, make sure your position size is right and your stop loss correct, because there are going to be quite a few times, like Brady's just mentioned there, you think, why is that? And it might be probably some reason behind it. We don't know about that specific time. You can only guess. But sometimes it can be very contradictory, I know. But on the bright side, as I say, those who've been in the trading room found that we've got more good ones than bad ones. So the only time mistakes are made is not from the trading idea. Often it's because of the wrong exposure, holding on too long, taking your stop loss, moving it too quickly, or whatever, playing around with it out of nerves and frustration, which you turn a very bad, a good one into an okay one, if you see what I mean. So we all learned from Mr. Luke there on the Brent. He modified his TP. How many times do we think of that, eh? And it did nicely for him. Well, bloody done. That's a learning lesson, including myself. Don't forget that damn TP can be modified as well. Why get off a winning blue train and then hang on to your red train? Okay, anyway, that's about the best I can come out with that, Brady. I think much more intelligent on that one. Okay, we've got a few minutes left. Any other questions? You've got your DXY, you've got economic calendars, you know about position size calculator, I've explained the different moving averages on there, the lack of clutter, you know how to save the charts, so you don't, if you lose them, no problem. Yeah, you know how to specification, do that every time. Want to see what the properties are on that one, left click on the one you like, right click on it, and then left click on specifications, give you the margin, contract size. That's 100,000, remember? That's why it's so different on the share. Let's click on the share, right click, specification, contract size is 1. So that's why you might put down 5.0 on a share and put 0.05 on a, it's a different exposure size. Okay, all of the shares are 5% margin. You can always check it in case it's changed, but all of them, there's a margin, not there yet. There's 5%. Okay, so all that means the leverage is 20 to 1. You want to know what the leverage is? Divide the margin or deposit into 100, gives you leverage. If it's R1,000,000, there's 100,000 Rand deposit, that means a 10 to 1 leverage. 10,000 Rand deposit, 100 to 1 leverage. 2,000 Rand deposit, that's the 500 to 1 leverage comes in. And people don't understand that 2 grand's come out of their account. Their responsibility is the exposure of 1 million. And that underlying million doesn't have to move much to give you extreme problems on your 2 grand. That's why do not go in bigger, because you can work very much on what you're prepared to risk. So it's 1,000 or 100 or 200 or 500 to 1. Doesn't matter if you put your stop loss to your entry, you worked it out, is 150 a micro, you're willing to risk 300 Rand, so it doesn't matter on the leverage then. That's where you get stopped out. Unless it goes through it, as we mentioned yesterday, or it opens above or below after close either over a weekend or like a share opening up at +4. Remember, the stop loss is just putting it out there, buy or sell it. You know, it's a buy or sell order. There's no, if it screams through it, no buy and sell that price, you'll have to get a different price, which might not be favorable. Found that a little bit the hard way yesterday when the shares opened up better on a short than expected. We get a lot of feedback on that. I put my stop loss there. Why did I not get out of it? Because I'm offering this TV set for you to buy. It doesn't mean say you will do it. That's why we never ever do it on what we call penny shares. We don't do any JSC at the moment, but in the past we had the JSC. We only used to do the top 40, 50. We wouldn't do penny shares. There's not enough volume, so you couldn't get out. There weren't enough buyers and sellers. So you might put your stop loss there, but some of the smaller shares might go days without anyone buying or selling. So it's irrelevant. Hope that was all clear as well. Okay, that's about it. I think any questions before we just tie this up and see what Powell's doing tonight and see what's happening tomorrow. And we've got a fresh set of interest rate carry on tomorrow. So we're not out of the minefields yet, but we're learning. I hope we are. And maybe we can get some good out of it after all. Okay, guys.
Just the last question. What are you, pro dollar or for the week dollar?
I'm thinking that actually might weaken a little bit, but that's just a gamble on my part. Anything could bloody happen. But I think it might weaken a little bit more. But again, it's just as I think. It depends what he says, basically. If it's forward momentum, is it still too inflationary? Interest rates are not going to be curtailed anytime soon. It's going to be good for the dollar. If he says the news is good, probably our last one will be in, I don't know, January next year or March next year, because it's looking good. Our policies are coming to effect, inflation's coming down, then the dollar will sell off. So what, I haven't seen his beige book. I haven't seen his figures. I'm sorry to say. So I can't see what he's going to say in the Q&A afterwards and the expectations. So I'm just saying that a bit of fun. Don't take a lot of those. No.
No, thank you.
Otherwise, I might something you want to hear. and then you act on it, and it's the other way around, and I'll feel very bad about it. So I'm gonna sit on the fence on that.
No, whatever he's saying, this is gonna, no matter what you fixate up front, in the end of the day, his word is king.
Absolutely, absolutely. You and I both know we're far more important than him, but unfortunately the market doesn't agree with us. So they think he's more important. So we'll have to go along with that. Yeah.
True.
True. Anything else, guys? Anything else that you just want to just quickly been nagging you? Do you want to get a chance to ask it? Okay. Well, I can honestly say, for what I expect a really frustrating session, it's turned out, at least from my perspective, been quite enjoyable. I feel if anybody trades that, at least we've bloody well learned something or added value somewhere on the line. And then it makes me feel worthwhile. Fantastic. Great stuff, Trading Marines, fellow Trading Marines. Catch you tomorrow morning, those who can make it. Don't forget, guys who are not aware of this, if you miss one or you can't make it due to work pressure, it's all of these recorded on the portal. Go down menu to social media, it's on YouTube. Okay, fantastic, guys. Thank you very much. And we learn from each other. Perfect. Okay, guys. Quinant, and see you mañana. There you are. So my expertise in languages.
Lala gasle,
Okay. Top scenes.